All right. So this has been an interesting week so far. Let's talk about the biggest news ongoing in the media, which is Greenland.
Yeah, it's quite surprising. Well, maybe not that surprising, but it's quite surprising that it came out of kind of nowhere on Friday, right? The market was going and the market was ticking up. Actually, it was all towards brighter futures, and then all of a sudden, we had the announcement, and then well, we see that the market has reacted quite poorly. And obviously, the surface level analysis is that listen, he's a very powerful person in the world, and he said something that is very, very dangerous to basically an ally, saying that he wants control of Greenland. And that is really unexpected and really unprecedented. Now, Trump is a person who who does say quite a few things, which might be outlandish by most standards. Um, However, it's kind of expected because of the frequency of his messages. A lot of the time, the market kind of shrugs off what he says unless there's something actionable being done about it in policy or some kind of action that is expected to make it to policy. This time is different.
Yeah. So we're seeing the market responding in expected ways. Gold futures are up, I think, 1.8% right now.
Yeah.
The NQ is down slightly more than 1%.
Hmm.
And I think last night Bitcoin really took a dive down. So it actually hit the 92K handle before recovering quite a bit back to 93.
Hmm.
Oh yeah, around 92, slightly less than that actually.
Yeah.
So so I think a lot of people who are trading Bitcoin are just pulling their hair because Bitcoin has been doing pretty well, relatively speaking. It's been chopping, but the trend has been moving up and slowly breaking through the 95K resistance. But then this news kind of killed some momentum. We'll see tomorrow whether or not the market can recover from this. I'm thinking that it probably can because, like most Trump-induced meltdowns, the market generally gets a hold of it pretty quickly
Hmm.
and they shrug it off, especially from the fact that uh, the market kind of realized what's Trump's like game plan is. So before the clarification of this announcement, the market was selling off because they didn't really know why the administration has just been aiming their crosshairs on Greenland.
Yeah.
But a post came out saying, I want Greenland because Norway isn't giving the Nobel Prize to me. Now, yes, that was there's something that was real. I'm not making this up. I'm saying this verbatim, but I think when markets actually heard that, ironically enough, they probably sighed a breath of relief because they realized that was such an outrageous statement. Um, it's unlikely that any attack of any sort will actually materialize. So the market decided to reverse some of the sell-off in response to that release. Now, what does that say about the regime? Well, connecting back to our regime has been experiencing some deceleration and growth, and also I think there has been sort of a flatlining in inflation, but we're kind of moving up from there. Is that right?
Yeah. And to really start the story, we should look at what was happening last week. In our podcast last week, we talked about our brand new feature that we're trying to roll out as our product, which is about our regime macro, which tells us what kind of environment we're in, if we're how risky the market is, and what sort of sectors typically do well in each of our regimes. We were on track last week. We said, hey, things are very good for a growth environment. That came off from accelerating growth, accelerating inflation, in a good way. And what we saw in the data last week was that we saw increased retail spending, We saw existing home sales higher than expected, higher than forecast. And we saw inflation meet its target and core inflation do slightly better than expected. And all of this was, once again, a confirmation and a green light for the growth regime. Um, in fact, Bitcoin, which is I suppose, the early warning system, or like the early actor when it comes to risk environment sentiment, Bitcoin was on the up, especially with the data release. Um, However, things are slowing down, and it makes us question why things are slowing down. One thing that we saw on our own internal filter was that across the week, the growth metric, which was initially accelerating, has started decelerating. Now, because our regime filter is a machine learning model full of many, many factors, it's a little bit hard to diagnose why it's suggesting the composite growth score um, is decreasing. So maybe this is a good time to look into it, because our regime filter, it doesn't rely on sentiment to make the judgment. It does rely a bit on price action as well as other economic growth metrics. So let's dive into it now. What do you think is happening with the regime? And then maybe I can fill in where we can continue.
Yeah, sure. So what I think is happening here is in regards to the regime, let's talk about inflation.
Hmm.
So inflation is by essence, pressures that are raising prices across the board, either through assets, through commodities, through consumer goods, that type of sort of thing. And we experienced some inflationary impulses based on some geopolitical events that has happened over the last, let's say, 45 days.
Hmm.
So um, um, we had Venezuela, which we did talk about last week. We acknowledged that the impact on that hasn't been super substantial, but the more important one has been the Iranian protests. So that's something we haven't really talked about yet.
Right.
So I live in Canada. We both live in Canada, and I noticed, recently over the last couple of weeks, the gas prices has gone up quite a bit,
Yeah.
and that really coincided with the Iranian protests and some of the chaos that's happening in the Middle East. So if you look at your crude futures, so the CL crude futures, that actually experienced some wicks up, and it actually hit more of a overbought level before pulling back quite a bit.
Yeah.
But regardless, so that I think definitely has played a role in affecting some inflationary impulses. Plus, when we look at other commodity baskets like GSG, for example, you see the same thing. So GSG is also um, going into overextension, and then you have copper. So I'm just gonna pull up the futures there. So copper has also been looking choppy. It hasn't been going really anywhere, but it has been chopping. But then also you're looking at metals as well, like gold and silver. That definitely has been hitting new highs. So all of this, gets fed back into manufacturing, transportation, costs, and ultimately it plays a role in keeping inflationary pressures quite sticky. And we see some of the CPI data being like that, right? I think our last number was around 2.7% or so,
Hmm.
which is not a bad number,
Higher in Canada.
considering.
US was pretty good. 2 point US was 2.7. CPI
Yeah,
core inflation is 2.6.
yeah. So considering the chaos that we've been experiencing, I take a 2.6.
Yeah,
It's not that
all
bad,
it's actually quite good
all things
actually.
considered.
Yeah,
Yeah.
less than
So all
expected.
things considered, yeah. So all things considered, I don't think that's a bad number. I think that's a great number, and it makes me feel like, hey, with all of this chaos that's happening, and we're getting 2.6. What would the real number actually be if we didn't have this, right? Without these tariffs and without these geopolitical chaos, that's something to ring a bell that I would kind of consider. And maybe it has to do with the AI development we're going through with the new data centers being built out, and that I know that has been causing quite a shortage of different resources, especially with water and with like RAM. So construction of booms have been happening, and that has been causing some inflation as well.
Mm-hmm.
Overall, though, the inflation impulses seems to be healthy. But when we pivot to growth, I think that's where it gets a little bit murky. Because when we look at, like the Atlanta Fed GDP now forecast, they're predicting around, slightly above 5% in terms of growth for this quarter. Now, these numbers are obviously subject to change because they're just a real-time forecast of what the numbers might be based on their current data. So as data, comes out throughout the week, throughout the month, things will change. But at the same time, though, we've been seeing how unemployment is starting to gather some of our attention, and the labor market remains very weak. So we got 50K in job productions on our last print, and if this continues trending downwards, then I think that might actually warrant the Fed into maybe cutting preliminarily, just because inflation seems to be doing okay, but the labor market seems to be very weak. So just connecting this back to the stock market, I think the market already knows this, and it's really been trying hard to kind of break new highs. When you look at the S&P 500, so the S&P 500 has also been doing what QQQ is doing. It's been chopping and just slowly grinding higher, and just until like maybe yesterday, the futures were still on an uptrend. And you also have your small caps as well, like ASTS, especially ASTS,
Mm-hmm.
and other companies like Rocket Lab, for example. They've been doing pretty well recently. I think they've been actually been outperforming the Magnificent Sevens, just based on their most recent performance.
Yeah.
So we're seeing this some sort of bifurcation here, where ironically the economy is doing well enough that even some of the small caps are capturing that growth and it's being reflected in their price action. But the economy is still in this weird place where it's problematic, such to the point that the overall market at large isn't experiencing broad spectrum growth. So I think there's some confusion here, and the volatility that we're experiencing is muddying the water even more. And as a result, I think that's why we're seeing the regime weakening quite a bit. But we don't have enough time yet or data yet to really see if the regime will flip again back to risk off.
Yeah, at the moment, our predictions still remain the same, with around 75% chance of it remaining growth for the next 3 months. Um, so we'll get to see the impact on our model. But our model is, still quite new and developing, so it will be our first test for the model. But it is quite interesting to see this diversification. I think it also adds on to what we were saying last time. And last time we were saying in 2025, it was the year of AI in general, where if anything mentioned AI, any company, any small scale, large scale, even maybe your small local business, maybe not that, but usually medium scale businesses, um, it was a boon. Everyone benefited, especially the stock market evaluation. But in 2026, it seems like we're trending towards the era of only the victors being rewarded. So if your technology, especially in the tech field, if your technology is the one that is leading the revolution, that has a unique value, that's superseding the competition, then and only then are you rewarded. I think, like, looking at how the market's been doing overall, we see the giants, as you mentioned, not doing so hot. If you look at what's happening with Microsoft this week, if you look at what's happening to Meta this week, I know Meta news was actually not necessarily all about AI, but um, look at Amazon this week. Amazon's still okay relatively, and so your Mag Sevens, Apple, these aren't doing so hot in the current environment because they aren't necessarily your winners. Even your winner Google, well, Google did pretty good, but still not as great as some of the more medium and just more small caps. So I think it's gonna be quite an interesting year in terms of AI. I don't know. I feel like the earnings are coming out soonish. At least the meta earnings are. So we'll kind of see what the vibe check is going to be for AI then. Um, do you have any personal experience? Are you still in TQQQ or have you rotated off for now? What are you doing personally?
So I'm just waiting for the regime and see where it goes from here. I think while the regime is weakening, I'm not gonna sell out yet. I'm gonna hold for a bit and just see if the regime actually flips. This just could be some temporary deflationary impulse. So right now, I'm personally holding it, but I have recommended others into pivoting and rotating their capital out of it for now because this could be a sign of something worse, right? And I am a bit concerned with the direction of the market and where it's going. But when I see the small caps performing as well as they are, it does give me some confidence that um, this could just be a dip, and and the market will actually rebound from this. And we kind of see that already happening with the futures. So maybe that prophecy will actually end up coming true. But we'll see. I can't promise you anything.
Yeah, usually when small caps do well, and Bitcoin does well, it's a good indicator that the market is feeling, hey, I feel confident to put money back in or
Yeah,
put money in like large amounts.
yeah,
So
yeah, yeah, yeah. The regime has been weak in general so far. I don't really like the strength that I'm seeing in this Rasan regime because usually Bitcoin would have at least hit 100K by now, but it hasn't and it's been shopping. And that makes me feel that one, either Bitcoin has lost its status as a highly risk on asset, which I doubt, or two, there isn't enough euphoria yet that acts as a shield in case there's any potential drawdowns, such as the ones that we're seeing right now.
maybe the euphoria is kind of capped, not necessarily by markets, but by kind of human psychology and what's happening globally and
Yeah,
politically.
could be. Yeah,
Yeah,
yeah, exactly right.
it's
But
very likely. Yeah, it could be
yeah,
cool.
and it does look kind of good when I see Bitcoin going from 91.9 to back to 93. That's a good sign that the market is strong enough such that this is more of a test than a real drawdown. So I think that we just need to give it more time to play out and see what happens on Tuesday.
Yeah, you know what could be an interesting deep dive for our next episode? We could look into like how the hypothetical world where the geopolitics were not an issue, what would
Yeah.
be the current state of the market? Because I think that's a really interesting question, and I think it's actually a very good investigation because we could find out what are the current underlying issues that might be being swept under the rug by the more prevalent newsworthy geopolitical issues. So
Mhm.
could be interesting. So
Yeah.
I think with that, I think we will wrap it up here for today.
Yep.
Um, and let us know if you're interested in this, deep dive into a world where geopolitics were stable and we were focusing just on the market and see if we can find any issues in the underlying. All right. Thank you so much for watching. We hope you enjoyed. Subscribe and leave a comment. Thank you. Bye bye.